Hey, how you doing? And welcome to Livewire's Buy, Hold, Sell. I'm Ali Selby, and today we're taking a look at 3 stocks fund managers are absolutely loving at the moment, as well as 2 punter favourites that they believe are flashing red. To do that, we're joined by Andrew Peros from Ausbil and David Keelan from Elliston. First up today, we have family tracking app Life360. It's widely loved by the investment community and punters alike. It's seen its share price rise around 170% over the past year. Andrew, I'm going to start with you today. Is it a buy, hold or sell?
Ali, it's a strong buy for us. Look, the starting point when we think about Life360 is that anything you care about, you're going to know where it is. So your kids, your family, your car, your laptop, or your grandmother with Alzheimer's disease. So that kind of creates an opportunity that 360 can grow into. It's a new part of the market. It's evolving. They have 77 million active users, and they've been able to monetize those users quite incredibly to date. So through advertising, pet insurance, motor vehicle insurance, financial services, and elderly tracking. So it's a business that we really like. It's actually the fastest growing SaaS business on the ASX, trading at 5 times EV to sales, much cheaper than T&E, Technology One or WiseTech, so strong buy for us.
Its CEO recently sold around $32 million worth of stock, which is usually a little bit of a red flag. Is that a red flag to you, David?
It's always a red flag, but you need to understand the context of why they sold. I'm not too sure there's any real context around this. He's done well, made some money, he's allowed to take some off the table. We had a bigger position leading into the result. We trimmed beforehand. We believed that it was a true buy the rumour, sell the fact, which it's turned out to be. Market expectations are way ahead of where they're doing. They're hitting every goal, but still the share price can't go up. They've got 77 million active users, as Andrew said. The core part of the business is doing really, really well. The next part is the turn on the ad spending. That is in its infancy, so we'd rather wait and see and take our money and reinvest it in other opportunities.
So is it a buy, hold or sell?
It's a weak buy.
A weak buy. Okay, next up today we have youth retailer Universal Store Holdings. This is another darling loved by fund managers. Its share price is up 131% over the last 12 months. David, is it a buy, hold or sell?
It's still a buy. It's probably got one of the best ASX retailer store rollouts available. Yeah. It's got a demographic that was hit pretty hard the last couple of years. Now they've came back. They really understand retailing, they understand product, they understand private label, so yes.
Okay, do you agree, Andrew?
Absolutely, it's a buy for us, Ali. It's probably one of the best micro-cap apparel retailers out there at the moment. Alice Barbery, excellent operator. Unit economics on the store rollout program are quite attractive. There's plenty of runway for the business to grow. Like-for-likes have turned sharply positive of late, so we're quite enthused by that. So it's a buy.
Okay, next up we have four-wheel drive and commercial vehicle accessories producer ARB Corp. It's another widely held darling. Its share price has risen around 30% over the past year. Last one for you, Andrew. Is it a buy, hold or sell?
It's a hold for us at the moment, Ali. I am a little bit cautious about market expectations going into the February result. Australian motor vehicle sales have been a little bit soggy. Could be a little bit of margin pressure coming through from freight and labour, and maybe the US rollout strategy is tracking just a little bit behind. But that said, this is a high quality founder-led company. They've got a long history of success. If there is any volatility around the share price, it's a buy the dip moment.
Okay, over to you, David. Is it a buy, hold or sell?
It's a sell. It's a quality company with great track record, but at the end of the day, it's trading on 30 times forward PE. Market is way ahead on the margin expectations. I'd rather put my money somewhere else.
Okay, we asked our guests to bring along a punter favourite that they believe is flashing red, something that should send you running for the hills. David, what have you brought for us? What are you selling?
Ours is Ordinate. We think Ordinate it's a really great product. Dante is the industry de facto in audio, but the stock is priced like a SaaS business. What we've learned the last 18 months is that their revenue is lumpy, their back order book is declining, and they've gone from making money to losing money.
Over to you, Andrew. What stock would you be running from right now?
The stock I'm going to talk about is Drone Shield, ticker DRO. Look, it's been a wild ride for the share price. Started the year at 38 cents, hit a high of $2.50, had a market cap of $2 billion. Wow. That's despite very little, if any, earnings upgrades from the market. Look, the backdrop for this company is that it is hyped up quite a lot. There's a lot of euphoria in the share price. which hasn't really been backed up by earnings revisions. Trump was recently elected president. He has committed to many things, but one of those things is to end the war in Russia and Ukraine and bring peace to Middle East. And if that's the case, that's probably going to leave a gaping hole in terms of market opportunity for Drone Shield. In 2023, they had over half of their revenue coming out of the Ukraine. In 2024, there's a large chunk as well. There is earnings risk. Not to say that we won't look at it ever, but at the moment, I think there's plenty of earnings risk, so it probably heads a little bit lower from here.
Okay, well, I hope you enjoyed that episode of Buy, Hold, Sell as much as I did. If you did, why not give it a like? Remember to subscribe to our YouTube and podcast channels. We're adding so much great content just like this every single week.